as a way to identify a firm that needs more attention.
And if I were to offer my own prediction for the global capital standards, not my desire, but my fear is that what will occur is that the insurance regulatory community, EU, US, and rest of the world will fail to agree on an approach, and therefore we will get an approach that is neither like Solvency II nor like the US system, but an approach that is imposed on that regulatory community by the banking regulatory community. You know, we will get something that is, and banking regulation is not like Solvency II, and it's not like the US system, and it's not particularly well suited. I think we can all agree to insurance problems. I want us now to spend a little bit of time on everything else that's happening in insurance regulation. One of the unfortunate things of the great Solvency II debate is whenever people talk about insurance regulation in Europe, they immediately spend all the time to talk about Solvency II, which is what we have almost done, but not quite. So, Carol, what else is happening on insurance regulation in Europe?
Well, but I think that the logical next step is consumer protection. And I think that's true worldwide for a number of reasons. The first thing that we need in Europe to have solid companies. We need to have solid companies that can produce, that can sell products which are good for the policyholders. But then we must make sure that these products are properly designed, that they're properly sold on the market, and that we avoid mis-selling practices, which we have seen in the financial crisis, and particularly in the area of packaged retail investment products, where companies have been selling, particularly in financial conglomerates, have been selling investment products, not being very clear to the people who bought them, whether they were buying an investment product, whether they were at risk, or whether they were buying an insurance product. And that is the subject in Europe, as we know, of the PRIPS, Packaged Retail Investment Products Directive. We have the MiFID #2, we have the Insurance Mediation Directive. All these are elements which are focusing on consumer protection. In Europe, however, if we look at the basic provisions in the treaties, there isn't so much scope for consumer protection regulation. And that's why a lot of the activity will be carried out by EIOPA in the form of recommendations, of guidelines, which then national supervisors may take up. But it is very important that we keep in mind that the sector needs more transparency. It is true in many countries in the European Union that we see that people don't know when they pay a premium where the money goes, who gets what on the deal. And that transparency will of course also change the distribution systems that we have in the European Union. Some countries work a lot with agents. I think that's the case in Poland. Other countries work primarily with brokers. That's the case in the United Kingdom. And so in each of those markets there will be impacts of this consumer agenda. But it is of course very important, and we saw it in this morning's presentation, I can only agree with that, that if nobody is going to buy your products, you might as well stop doing your business. So people must have the feeling that they're well taken care of. And I think that on that level, I think Terri and I will very quickly agree. I think we have the same issues on both sides of the Atlantic. I think mis-selling has been the case in a number of European countries, but certainly also in the United States. So in that area, I think that definitely is the next stage in the regulation, is to make sure that also the products are designed in the interest of the policyholder.
Now, I want to press you, just Carol, on one point. In Europe, in other areas of financial products, retail financial products in particular, other than insurance, there's a radical agenda of strong harmonization in respect of consumer protection, both selling and also the way in which the products are operated post the point of sale. In insurance, traditionally we've had some quite high-level, not very impactful European rules, and the real action has happened at the national level, with quite different, radically different approaches to consumer protection from one country to another. Is that the pattern for the future, or are we going to see insurance be more like, insurance consumer protection be more like other retail financial products?
I think that's a very important question that you're raising here, and I have my personal views about that. For instance, there's a lot of pressure in Europe to develop a European insurance contract, a kind of a measure that would establish the same contract all over the European Union. And so people can opt for that contract. I think that that is something that will be very difficult to develop. Because my experience with European approaches in that sphere are that if you want to have a European insurance contract, the contract will be the most elaborate of any contracts that we have in the European Union. So it will not be very usable or user-friendly because it will be very difficult. So to answer your question, Paul, I think that insurance is about service. I sell my service to a client, and the client will want to know me. So he's not going to easily buy, a Polish customer is not going to buy something from an Italian company directly from Milan, because he wants to trust the company in Poland where he buys from. And that's the logic of insurance, that it is a service product. The cultures are very different in our member states. The way people look at products, the way the law operates is different. So I don't think we will see in the future a very highly developed system of product similarity, with one exception maybe.
Yes.
That's an investment type product for retirement funding. Okay. And that's what people are working on.
Okay. What I'm going to do now, we've got a little bit of time left, not a great deal. I'm going to give opportunities for you who have listened so patiently to this great transatlantic debate. Yes, Stalin and Roosevelt, to which I play the humble role of Churchill.
I am not Stalin.
In the front row there should be some microphones.
Well, thank you very much for a very interesting discussion. I have to tell you 2 points. The first one, the discussion between US and Europe is fascinating, terrific, but it looks like for me like you are trying to square the circle or circle the square. So I don't envy neither of you, so good luck in trying to solve it. Point number 2, to a certain degree I have to make you a little bit sad, because all these discussions in this kind of stratosphere is almost irrelevant to us sitting in this room, because we are market takers. So it's interesting to see all the big boxers trying, kind of big companies trying to fight their way, but it's almost irrelevant to us. Then the third point is, and it will be followed by 2 questions. I believe that the role of the regulator is also to create proper competitive behavior in the market. So 2 questions. The first question is, are you aware of the fact that some of unintended consequences of you thinking about stability and resilience of the sector as the sector have terrific and unintended consequences of the behavior of certain players on the local market? So what kind of measures you would take on those things? And second question is, you guys focus on the resilience and stability of the sector. Outstanding. However, some regulators in other jurisdictions are also focusing very strongly on certain behavior of the sector, competitive behavior of the sector. And this is much more relevant to people like myself and ourselves working in a market that boardroom discussions about structure of balance sheet to certain degree is almost irrelevant to us. Could you comment on those 2 things, please?
Could I ask for a clarification first?
Sure.
Could you just give me an example when you say unintended consequences, certain behaviors
Sure.
in the market?
I am running a company that is domiciled and based in Poland. I have to compete with the branches of people who don't have to report, who don't have to do anything. The capital cost is completely different. and also have to compete with people who have legal entities here. So we have situations that a branch, let's say a branch or a small subsidiary of a very, very large player goes below any radar screen of big, important financial institutions. So certain unintended consequences would be they can do whatever they want.
Well, basically, first of all, on the issue that you say it is not relevant, maybe we didn't point out how relevant that actually is. I think it is very important that for Europe, for the European insurance market, that we have an international accepted system. So
what I was trying to say, it's irrelevant for the daily business of
I agree with you.
Spot.
Yeah, that may be the case. Now, on your other point, I think this is a good example that shows that the supervisory regime that we have today doesn't always work as well as it should be. Under the new rules of Solvency II, I think that will improve. What is the situation that you're describing? You have, an EU member state branch is operating in Poland. As you know, the way it sells its products will be supervised by the Polish supervisor. That's market conduct. So the branch cannot operate in a way which goes against the general good, which is defined by Poland. That's the first thing. If the behavior is potentially endangering the solvency of the company, then it is the role of the foreign supervisor to intervene. So if I were to sell products on the Polish market at prices which are completely unreasonable, that should be picked up by the home supervisor of the company